Canada's economy has a dirty secret. In the massive condo markets of Toronto and Vancouver, there's a crisis forming that has the potential to be as bad, if not worse, than 2008. Today's video, I'm going to tell you about this crisis. I'm going to tell you why you should care, even if you're not an investor in these markets, or if you don't invest at all. Let's start by talking about what exactly the condo markets are and why I'm talking about this. Well, specifically, I'm talking about buying a condo in a place like Toronto and Vancouver, Canada's largest Anglophone cities. Both of these places have seen the prices of these homes, particularly downtown area condos, increase dramatically over the last 10 years. And I'm talking literally hundreds of % increase. Meaning people who bought these condos back in 2010 saw massive returns. Millions of dollars were made for regular people. Because this has been so consistent and so profitable, so many people started pouring their money into these markets. They were buying these condos as investments, not as homes. And they were taking out large mortgages to do so. This meant that lots of mom and pops were able to generate huge income and sell their condos at a profit and retire. It was amazing. But it's not going the same anymore. In the high interest rate area of 2022, when we started to see inflation pile up and interest rates go up, we started to see a problem. Because a lot of these investors had put as much in their mortgage as possible, meaning they took out as much debt as they possibly could afford. And when the interest rates increased, they found themselves not able to make the payments. On top of this, we saw so much supply coming into the market that the prices started to falter. And once they started to falter, the whole scheme was up. The second prices weren't increasing, there wasn't any more money willing to pour into this market. That meant that prices actually started to fall. As prices started to fall, all of a sudden, these investors were in a really difficult position. They didn't have enough equity in their property to sell it. And the biggest problem was that rents started to drop. Now, for renters, this is amazing. But for investors who leverage themselves to the absolute limit, the second these properties started to drop, and then they found themselves cash flow negative, meaning they were losing money holding on to the property, there became a real crisis. This meant that whoever lent them the money for that mortgage all of a sudden was about to take a real loss on that asset. Now, when we're talking about traditional mortgage lenders, we're thinking about Canada's big banks. But not just traditional mortgage lenders were interested on getting into this lucrative deal and being able to get all of these mortgages out. We also saw smaller lenders or specific lenders start to take some risk. All of these lenders are now at serious risk of serious losses from all of these condos. We're talking tens, potentially hundreds of billions of dollars, depending on how bad exactly this spirals. Now, some of these banks are big enough that that's not a big deal, but we've already started to see some lenders not able to survive. And it's not just these lenders and these investors that are at serious risk. Developers have started to find themselves insolvent. In fact, 2024 saw the highest number of developer bankruptcies since 2008 and actually exceeded that number. Now, when developers start to go bankrupt, all of a sudden, you have some serious down the road implications because these developers were working on projects that can no longer be completed. And with the lack of those projects, with the sale of whatever assets those developers were going to build on, so whatever real estate they had purchased, whatever deals they had made, whatever materials they had purchased, all of a sudden you see that spiral into other areas. So if you're not a condo investor, you're not a bank, and you're not a developer, you might be looking at me and wondering, why do I care? Well, the thing is, Canada's economy is more tied to real estate than we might want to admit. In fact, I've seen numbers as high as 20% of Canada's GDP being in some way attributable to real estate, meaning that it was touched by real estate in some way. We're talking people who work in real estate, people who work in real estate adjacent things, renovation, materials, appliances. A lot of Canada's economy depends on the real estate sector. And a lot of people are all of a sudden in a position where they have taken real losses. Again, this is not just big institutions. We are talking people's retirement that they poured into these projects. This has the potential to spiral, with lenders no longer able to take as much risk lending out to businesses that want to try something out, to people who need a loan, to people who want to buy their first home. And then also seeing companies going out of business, we could see some real spiraling into Canada's economy. To make it all worse, we're talking right now in 2025. Canada's resource industry, another one of our major industries, is at serious risk. Our energy industry is at serious risk. And now our real estate industry is at serious risk. Any one of these dominoes could be the thing that pushes the whole system down. Now, I'm not saying Canada is about to implode, but I do think there is real risk here. And anytime there's real risk that the economy could shrink, the biggest losers are usually the banks. So, with Canada's economy balancing on the edge of a knife, what I want you to do is think about, what do you expect to happen? What is the worst case scenario, and how can you be prepared? On this channel, we talk lots about investing in Canada, and I am personally invested in lots of great Canadian companies. But when there's a real risk like this, I want us all to look at our own portfolio, look at our position, and think, how can we make ourselves or put ourselves in the best possible position for the worst case scenario? What do we need to do to be ready just in case we do see another 2008 here in Canada? With all that being said, if you enjoyed this video, you enjoy talking about Canadian investing, please do subscribe to the channel and like the video. Costs nothing and makes a huge difference. We've talked lots about Canada's banks, particularly here on the channel, as well as lots of other industries. And specifically, we have videos about Canada's banks that are the least impacted by this condo crisis. I recommend you check them out. They're going to be linked in the description below. And with all that being said, I hope I see you in our next video.